Hello and good evening, everyone. Welcome to the Power of Passive Investing meetup. It's great to have folks here with us. We have an excellent meetup tonight, and my partner and co-host Matt will introduce our presenter for tonight, since it's one of his close friends.
Sure.
Matt, please go ahead.
Well, welcome everybody. I see a lot of cameras are off. Understandable with I know it's evening hours, kids, dinner and whatnot, but glad for those of you that can join us. Glad for you guys to have jumped on and joined. I recognize a lot of names from our past meetups, which is great to have you guys back. I know there's a lot of folks that are new joining, either kind of friends or network of Justin's or mine joining for the first time. So glad to have you guys join us as well. Just kind of a quick overview. This meetup is called the Power of Passive Investing. Starts kind of a meetup pre-pandemic. I think Alina was running it meeting in person every once in a while. We've moved since then with COVID virtually, which has been awesome, because I think we've gotten a lot more people engaged, not just in New Jersey, which originally the group was focused on, but we've had guests and hosts kind of from other places across the U.S. I don't know if have you went international yet, Alina? Anybody international yet?
We had a few folks from Canada. I don't know if they're on tonight.
Okay. There you go.
Folks, so do we have anyone from other states other than New Jersey?
New York.
Awesome.
Okay, I heard in New York. I think I heard of Boston in there, but
nice.
So yeah, so it's been great to be virtual and have people from different areas kind of meet up, and definitely different perspectives. So it helps all of us kind of in the New Jersey area expand our networks kind of outside of the immediate area as well, which is great. So the group's typically focused on, the format of our meetings has been, we'll have a guest usually speak for 20-30 minutes. Tonight that's Justin, and we'll get to that in a second. Usually there is kind of a Q&A session after the guest kind of tells us their story. The guest topics range anything from personal experiences in real estate investing or other, to kind of sometimes folks tell us kind of the latest tips and tricks with, for example, I can remember a good one recently with asset management. We had Gustav and his partner Ray, and they talked about kind of like all these neat tools kind of came out with, like virtual lock boxes and Rently, and kind of like, so all different topics. And we kind of dive in to different things as we go. We had Matt Faircloth on not too long ago. He's kind of an acclaimed author. So we have wide ranging of guests. So tonight we got Justin. He's going to tell us his story of his success story of what many of us dream of, which is pretty cool. He's achieved it recently. In the last year, actually, he made the jump from his high-paying W-2 job last at LinkedIn in their sales department to now running his real estate empire full-time, making his living off that. So Justin, I'll give you the introduction. So Justin and I, actually, it's a funny story. Justin and I are close friends. We met through my brother, who's a plumber, and Justin had used my brother for, I suppose, one of his rental properties. I think my brother asked just enough questions to say, I think you should talk to my brother Matt, who's also dabbling in real estate investing. So that's kind of where the connection made. Him and I met for the first time. I think we met in Bryant Park and circled. For those of you who have been to Bryant Park, we circled kind of the lawn area maybe 4 or 5 times on a nice summer afternoon, just meeting for the first time. It's kind of an instant connection. Him and I have a lot in common, and I kind of like his drive. Justin's a couple of years ahead of me in real estate investing, so I was inspired by what he was able to achieve in a pretty quick time. So,
yeah, thanks, Matt.
Of course. So the proper bio is Justin's. He's a real estate investor and business owner. He currently owns 32 apartments throughout North New Jersey. He also invests in multifamily syndications as a limited partner. So he has the active and passive investing experience. He along with a partner, Antonio, who I saw had joined us as well. They had founded Rampa Hills Property Management Group, which now manages, I think they're nearing 100 units in New Jersey under management. He also runs a real estate sales business. So he's a real estate agent here in New Jersey. he also has a general contracting business, which is complementary to the property management stuff that he does. And also he's done some house flipping. Actually, that's him and his partner have now 7 flips to date. So good amount of experience there. I mentioned earlier, Justin started professionally his career in kind of software sales in New York City, last with LinkedIn. So definitely not, I would say not a shabby W-2 corporate job. Definitely a pretty high level job that he had to work up towards. I know he also traveled for his corporate job. Prior to that LinkedIn, he was in Denver. So his job brought him out there, and then he came back to New Jersey, I think because of the Mets. I think that's what brought him back. What's interesting about Justin is he got us, and he'll tell you all this. I'll tell you all this in more detail. I'm just kind of priming him here, but he bought his first investment property at the age of 22. What's commonly known as house hacking, right? So buy a 2-family or more home, live in one of the units, and rent out the other unit, which typically could cover a significant part of your cost. And then Justin kind of over time just kind of built up his different businesses and income streams while he was working as W-2. And that's kind of what we're going to dive into today and let him talk to specifically. So that's the introduction. Just a disclaimer, next page, Lena. The next disclaimer is kind of the legal talk here. Is just anything here today is not any investment advice. You guys obviously need to do your own due diligence, yada, 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 all that. Consult your own professionals for accounting, legal, or investment advice. Everything here is just personal experiences. We'd love to see, so housekeeping, love to see you guys. If you can, turn your cameras on. We'd love to see some faces. Otherwise, please keep your phone on mute or your computer on mute until the end. We'll do Q&A. You guys, if you have a question and you think of it, you can put it in the chat box and we'll come back to it at the end as well. For those of you that are just joining, we're recording it, so it'll be available for video replay. We'll share that via link afterwards. And then lastly, Lena mentioned, we've been co-hosting this together now for about 1.5 years. Alina has been doing this much longer than that. She's been investing in real estate much longer than Justin and I both. So she has a wealth of experience. If you want to connect with either one of us, here's just some information here on where you can reach us: email, websites, LinkedIn, and Alina's got Udemy courses, which is pretty awesome. So today Justin's going to talk about the W-2 job and how he transitioned from that into full-time in the real estate and the kind of the bullets here. So Justin, go ahead, man. You can take over, present your screen, and the floor is yours.
All right, let me pull that up. So yeah, I think, Matt, the real intro was, I believe, you want me to put this first? Let me put this in presenter's mode first. I believe you were at your brother's bachelor party, and we called him for something, and he was like, "Yeah, my brother wants to know how you're doing all this." And I said, "Well, maybe you should talk when you're not on a bachelor party, and we can actually talk." And then we met in Bryant Park. So don't forget that. All right. So thanks for kicking everything off. You seem to know a lot more about me than I thought you did, so that's good. We're closer than I thought. And again, feel free, at least the two of you, if something pops up that you want to express, for me to hit on, please do so. I don't mind getting cut off. If there's if someone puts something in the chat that's a really, really good question that would hit home, I think you should stop me to hit on that while the point's fresh. So feel free. All right. So again, Matt did give a really good kickoff here. I want to say that I'm in the only part of my house that doesn't have a kid toy behind it or something of that nature. So you're catching me all in a nice fresh wall here. I had to move some toys to get there. All right, so I'll kick it right into it, and again, we'll hopefully this is insightful for people. Again, the topic of this being going from my corporate job to full time. A lot of people talk about this. This is like a big podcast. A very big podcast theme of people. I actually named this the rat race, is what I think I named this doc. People call that the rat race. And I always remember for the majority of my career, I was in New York City. So I would commute from New Jersey drive or walk to a train, in the cold, in the hot, transfer, move over, take a bus, any way you think I can get to Manhattan, I figured out I can get to Manhattan. And when you're in Penn Station or Port Authority specifically, if for people who don't, haven't been there too many times, or you have been there, you realize that everybody is just literally in like this maze. So you do feel like you're actually in a rat race, who can rush faster to get there. So I always felt like there was more to that. You'll see, I'll talk through some of my background, but I played baseball since I was a little kid, all through college. It just never felt like I never really wanted to sit still. I can never really, I was never the best student. Not always the worst. I definitely tried very hard, but just things didn't click. Right. And I always would say to myself, well, does this always equate to like being successful or making the most money? And you just have to find the right path for you, because I felt, I got into sales, and I always felt like that was after I was not so shy as a kid. Growing up, I kind of came out of my shell and figured this was actually the right path to earn. So that's what I decided to get into. Pretty much right out of college. A lot of people take different routes, but you don't really know. And, they don't teach you sales in college, right? So you kind of have to figure out that path along the way. So, I'll talk to that in my experience on the next slide and go over the agenda. But just to kind of kick that off, same thing. If you want to see, you follow me on Instagram, the business page that we have, or personally, here they are. Feel free to follow, and, hit me up on LinkedIn as well. All right. So again, the agenda for the fifth time, but I'll go through with you guys again. So I'm going to talk about my story. I think that's insightful, simply because I don't think I did anything, honestly, in particular, that was life-changing. I just stayed a disciplined path. And I think that's some of the most important things that, need to be looked at. For the beginning part of my career, it wasn't like I was making, $500,000 a year. That's not where this came from. It started slow, and you just have to make sure that you're budgeting correctly, and staying focused and always being hungry. A lot of friends, family will laugh that I was, I've been working, from an early age, always grinding to try to figure out how I can do things. So this has sort of always been in my DNA as a kid. And it's, it actually does translate to, what you need to do further on in life. If you never lose that drive, it'll always be there. So the reason why I want to talk about my story is because I think it's very, you could duplicate it pretty easily. So it makes it attainable. We'll talk income streams while I was working in the corporate world, which if there's any of my bosses in here, sorry that I did this, but I did it. And, when to take the leap, which I think is important. And then leveraging money. I have a lot of people who, how do you buy all that stuff? How do you do this thing? And I think I'll be able to describe it pretty easily, how you leverage not always your money. All right. So personal life, grew up in Wayne, New Jersey, went to Wayne Hills High School. Like I said earlier, played baseball in high school, went to college, played baseball in college, went to Rampo College. And you could ask my parents, I don't know if they're on there or not, but I never really was dying to go to school. I just kind of figured, well, I have to, I'm going to play sports. So I'll get into that. But, I'm not someone who, I don't necessarily go against going to school, but I just don't think it's the most important thing in order for you to be successful in the way that you want to be. So I think it's really important if you know what you want to do, to try to focus in on that as early as possible. College does give you a foundation of certain things, but, again, I'm not the number one proponent of going to, or at least going to a 4-year school, or, going to all these different, it doesn't necessarily mean you can achieve what you need to do, but if for certain paths, I think it's really important. And then Matt mentioned earlier my corporate experience. So my first job out of school, I worked for a roofing, siding, and windows supplier. I did inside sales for them. Actually, we still buy from them to this day. And left that company after a year plus. Obviously, when I graduated, it was one of the worst times to come out of school, 2010, when there was no jobs. So you pretty much took whatever you can get and learn from. And then quickly from there, we got right into the tech space. So I worked at a startup company that sold marketing software to small businesses. Fancy enough, I'm a small business owner now. And that was really the career trajectory, and making sure that like I knew this is what I wanted to do. Started cold calling, happened to be really good at cold calling, which is not the most fun thing in the world, but once you get good at it, you can show a lot of experience, and you can get really good at something like that. Quickly moved up the ladder there, and became a manager, training manager. So again, when you do well on the one sales job, you can move up pretty quickly. And I always felt like, okay, I'm a sort of natural born leader. Let me try to get into the management cycle. And had the opportunity to open up an office in Denver or Arizona. We chose Denver, and I lived there for 3.5 years, which is, again, very different for anyone who would know me. It's a very different place that I would normally live, but really great experience. Again, was there mostly just for work. So I would leave work, and as Matt joked earlier, would just, get the Mets game back at my apartment, and just like really was just there focused on work. But the really cool thing about that is I went from being the first employee, or I was actually the 12th employee total. I was the first employee in Denver, and by the time I left, I was managing a team of 125 people. So that, like, the amount of hiring and firing, unfortunately, I had to do there was a really, really good basis for the stuff that I do now, because I really have no emotion towards a lot of these things. And I think that's really important, and why property management has been a good arm for us, because, I see dollar signs, and I want to make sure that the building's run correctly. But I've seen pretty much, at even a young age, I saw a lot of stuff that most people will never see and have to do, again, having to tell people they lose their job, and, it's a business. So you have to do what you have to do. But that was never easy. So I saw a lot, and that's why that was a really good move. So I was there for a little over 5 years at the company. My wife moved out with me to Denver. We met in Jersey. She came out there. We moved back here after we got engaged, and then we, settled down back to where we were. So it was a really good time for us. But when we came back, I worked back at that same company for a little longer, and then got a job over at LinkedIn, where I was there for 3+ years. And again, same thing. Like you move up the ladder there. I think one quarter I was number one in the country. And the funny thing, again, going back to college, was I went to Rampo College. Most people don't know what that college is, but everyone, Dartmouth and Yale, and I mean, name a school, I competed against them, but it didn't really matter. It's all about how hard you work, and how well you are at sales. It doesn't really matter. So that's why I always like sales, because it didn't matter who had the highest degree to get the job. It was just who was actually the best suited for it. A couple, 2 jobs later, and I, like I said, after I left there, I decided to figure out like where I need to be. And I just figured, all right, I need to make the most money possible in the sales game, while also giving me the most opportunity to work these side jobs. So the last company I worked at was a company called Monotype. I, again, was pretty good at the job. So I can pretty much do what everyone took in 40 hours. I can do it in about 15. So I was able to run a lot of these other businesses and start these things while I was working this job. I guess we could lightly say I got called out many, many times by my managers to, why are you getting up from your desk so many times? But it was because I was building a dream behind while I was still getting paid to do the job that I was already doing. So when, I'll go through, but when I decided to leave, and it was kind of a mutual parting ways at that point, I was already very prepared for this. Again, I had a family. I couldn't, can't really live on unemployment with a full family, mortgage, and all these things. So, luckily I had all this stuff prepared for this, versus me having to get another job. So I could take that leap. I didn't have to do another stationary job in the meantime. So I think that was really, really important to have all the foundation of this. So again, without having to go too much more in the experience, I think Matt highlighted some of these things already. So I'm not going to necessarily have to read them, but I think what's really important is to know that those 10 properties, they were not all bought in 1 year. 2 years ago, we bought a couple, or I think we bought 4 in 1 year. So that was the best year that we did. But the majority of this started off slow. So I'll jump down to my what I call my foundational first deal. I bought my first 2-family house with the 2-car garage in Lyndhurst, New Jersey. I needed to be close to the train at that time, as I mentioned to you. My parents moved from New York to Lyndhurst, and I knew very much about the town, so I was very comfortable there. As the 22-year-old, you don't know what you're doing, and anyone's first deal, you'll see. As a realtor, I see a lot of people, their first deal, they're very nervous, like everything's an issue with them. They're scared about a lot of things. That's really why when I'm a realtor for them, I try to really put them at ease, because I know how scary it could be, and every little thing, every hot water heater or any little crack in the wall, you flip out about. So I was 22, bought the first house. It was not in the best shape. Had to do a lot of cleaning that I know my mom and dad will attest to. Redid floors, and I really just got the first floor upstairs rocking and rolling, and I got the bottom floor that I was going to live in. I had to fix that place up, fix the bathroom up, do the floors, etc. But just to get it to be livable. So I lived on the bottom floor, rented out the top. At that point in time, I was making under $40,000. Okay, so I saved up all my money that I had from growing up, working as a teenager all the way through, and I was able to make the down payment. And that was the first couple months was like probably the only time I felt like, oh wow, like this is nerve-wracking. Now again, like you no longer have your parents to help you with anything, and this was on you. So I needed to get that rent from upstairs, or I was going to be in bad shape. So the reason why I really like talking about this deal specifically is because a lot of people want to go buy that single family home right away. And I just don't think it's always the smartest option, unless you're going to buy a real big fixer upper and then, do a cash out, which we can talk about later on. But this is what I always try to recommend for everybody to do for their first house. You buy a 2 or 3 family, whether you want to live in the smallest unit, live in the studio and rent out the other 2, whatever it is, it doesn't matter. But I really think that this is important for people to understand that without this house, I wouldn't have learned a lot of things. I wouldn't have been able to go on the same trajectory that I was going on. And then just flipping back to the current streams again, property management. We have a property management arm, general contracting arm. I work for a wholesaler that I partner with to bring in a lot of off-market deals, which have been really great in 2021. I'm a realtor. I will sell you a house if you're looking for a single family home, but you better be like a really close friend or family, because there's way too much emotion in that versus a multifamily, where I've sold multifamily houses to people with only doing one showing. You can ask Matt what I've done with him on one showing too, and I think that's really important, because there's no emotion in it. It's just numbers. And I don't have the time to, go show somebody 25 houses. And then, obviously we do a lot of flips, and that's where you learn a lot from doing that. And then that kind of trends into why we opened up the other 2 sides. All right. So again, if anyone has any questions, that's fine. I can stop here, but I will. If not, I'll jump into anything to the next slide. Okay. This is some of the learning portion of this, these next couple of slides. So hopefully take some notes, and, if anyone's looking to ask me anything later on, I'm happy to answer. So setting up the income streams. This is what I was doing probably when I started the last job. This is really what I've started to understand, right? So 1 rental a year, I think that's the most attainable thing that I'll be saying out of this whole entire deck, is 1 rental a year. You will build generational wealth if you just buy 1 rental a year. Some of this money will start off from your savings, obviously, but don't try to do too much at one time. Don't try to be, I'm really just looking forward to buying that 14 unit. That's not where you want to start. Just foundationally do 1 a year with your W-2 job. The W-2 is the most important thing about your W-2 is you have a W-2. The banks love you. They know that the money's going to come in every 2 weeks. So you want to make sure that you stay on track and focus on, I'm going to just buy 1 a year. I'm not going to buy 5. I'm going to buy 1. You buy 1 and then, okay, wow, I'm pretty comfortable at this now. I understand what I need to do. Now, if it's your primary home that you're also going to live in, you can take equity out on that home, which I'll get to on the last slide. But keep that in the back of your mind as you're listening to this. You want to always leverage your assets. So in reality, you can really buy your first house and then use that money over and over and over to buy your other properties that you're going to keep scaling. Now, again, you obviously have other bills and other things that you're going to be, trying to achieve. But if you can focus on one deal a year with the money that you're saving to the side from your job, you get a bonus, commission check, whatever the case is, keep that to the side. Always, my mentality, because I was in sales, always a 50-50. So I would make half my money in commission, half my money in salary, base salary. I always just try to live, all my bills were paid off of my base salary. And I always used all my commission that I made, and that went to these deals to start, earning. So I didn't buy one a year, but I think I bought the next one. So from 22, I bought another one maybe when I was 20, because I didn't buy any when I lived out in Colorado, which looking back was a big miss, because I was there probably like right in the middle of when things were starting to bump up out there. But I was too busy like running an office. I didn't have my head on straight there. But when I came back, pretty much within the year of when I came back, my wife and I bought our house here. And then after that, we just started cooking with gas and, started, building this slow mini empire that we have. Okay. So talking about running the side business, I did this early. I did this often. I'm not the kind of person who's on their phone, like, playing Candy Crush or going on Instagram or, I don't know what everyone else does these days, but pretty much every single time the phone's in my hand, it's business related. Texting people, texting clients, whatever the case is. So from as soon as I got out of my car, phone was back in my hand the whole entire time I'm on the train. I'm talking to people, talking to tenants, whatever the case was. I write mornings, lunch, nights, and weekends. It was definitely more than that. It was a lot of during the day. It was a lot of like when my manager was, in a meeting, I would probably do things too. But you have to remember that I was still doing well at the job while I was able to do this. So again, I never, I think I write this somewhere in the deck, but like, don't not do your job and get fired if you can't afford to do it. I was always focused enough to be able to do both. And that was like, very stressed, but I was able to do it because I knew where the end goal was going to be. So always keep that in mind. If you have a passion, there might be some people who I don't really like real estate. I don't want to do that. Well, you can invest in a small business. There's plenty of business brokers, buy a plumbing company or buy a moving company or buy a barber shop, right? There's other ways you can do this on the side. So say someone, again, does hair. Well, invest in that business and start them up, but you run it from the side while that person's actually executing on cutting the hair, right? So I always think about these things. I'm always trying to invest in not only just real estate, but there's other things that I'm always trying to think about because, you always want to have a different avenue because you never know what's going to close, right? COVID was a really, really tough year, the last 2 years, or it's still going, I guess, but it's really hard to navigate that and to figure, if the rent stopped, well, then what was I going to do? Well, luckily we had GC to fall back on because everyone wanted to do renovations of their home. So we always have like a plan B in all these aspects. So I think it's really important. As I said here, buy a small business, invest in that. So that might not be real estate for everybody. People might be nervous about that. What I will say is, well, hire us to do the property management. So definitely buy real estate. It's generational. To be able to pass down 1, 2, 3, 4 houses to your children. That's why I am really proud of myself. Number one over this is because I know that when I move on, that my kids are going to be pretty set. And I think that's like the most important thing that you can do for your children is making sure that they're set up. Well, besides like loving them and playing with them, but you want to make sure that financially they're set and they feel comfortable, which I think is really important. And then lastly, for people who are completely nervous about investing in things and want to just do things very safe, I'm sure there's people on this call. I've seen some people on this call who I know who are conservative. That's why you can do a syndication deal. Syndication is investing in real estate without knowing fully what's happening on the deal, most likely always, but you're putting your money into a deal. You have all the returns ahead of you. You pretty much know exactly what's going to happen. Obviously things can be, you can, have a bigger profit or a smaller profit, but overall, exactly what's going on. These deals are not in your backyard. You don't necessarily need to see them. And you just hang out as a limited partner, just put your money to work. think of it more as a, like a long-term stock plan versus, a day trade. So I think that's another way. If you're completely nervous about everything I'm saying and I'm scaring you and you think I'm crazy, which some of you may think I am, that's fine, but just make sure that you're investing somewhere. And I think a syndication deal is really important. For anyone who doesn't know what that is, it's basically, let's call it, there's 100 units in Arizona, and they need $2 million. So the GPs will do a raise. You put in your $50,000, whatever the deal ends up being, whether they do a refinance or not, you'll get some of your money back in a couple of years, or after they sell in 6 or 7 years, you'll get X dollars back. So these are really important, and you should try to, again, if you're not going to invest in one house a year, you should try to do at least maybe one syndication deal a year. Okay. When to leave the guaranteed money? All right, that's the $1 million question. And I think that it's really hard to leave, and corporate world does this on purpose, right? It's a hamster wheel. Right as you think you're going to leave, and they can sense that you're going to leave. Oh, here's that $5,000 bonus. Oh, here's that extra PTO week, and then you go back home to your wife or your husband. Oh, look, I got $5,000 more. I guess I'll stay. And then you're back and you're right back in it, and you're going to, go right back on it. Again, none of this, I hope I'm not getting to the point where I'm telling everyone to leave their job. I'm not. I'm just saying that there's other options, and at least do stuff on the side that will make you happy. Because even though I was working a corporate job, and I always liked my sales jobs. I always liked my jobs for the most part, but I always knew there was something more. So at least you can have something on the side that you're not always just focused in your spreadsheets all day long, trying to figure out, crunching all these numbers all the time. You can at least have something on the side that you can feel proud about while you're doing these jobs. So the top line here is just basically showing the way that I got into all this stuff. So the first thing was obviously rentals. I had, before we did any flip, I had 3 rentals by then. So I always just, like, again, you don't do a ton of work on these rentals, but you deal with people, you deal with tenants, you learn about depreciation and, with taxes and all the different, the beauty of real estate, obviously, is obviously taxes, which I don't really even get into too much, but I'm just giving you the trajectory of how it went. So it went rentals, then we did our first flip. I'll give a quick overview on the first flip. I think it's really important to know. A lot of people that are friends of mine will call me and they'll be like, oh, I really want to get into a flip. I want to do a flip because, like, on the TV shows, they look really fun. And maybe if you look at our Instagram, they look really fun. You can ask my partner how fun they are sometimes when things go wrong. But what you need to understand is that they're really, really hard. And especially the first one, when you don't know what profit you're going to make 100%. Many, many, many times I would drive from the Harrison train station to Boonton to cut trees or cut weeds, or go in there and demo and take off from work to go demo, or, do things that I have very little skill set. I was never interested. My father's very, very handy. I was never interested in doing more than holding the flashlight for him. Never was. I always felt like, oh, I'll just pay someone to do this. I'll make money on the side, what I'm good at, and I'll pay someone that's good at doing this, that likes to do this. I don't like doing this. But for the first flip, trust me, we did a lot of things that I didn't really know how to do or like to do. Spent a lot of extra money there than we thought. Just a quick example, we pulled the roof off. We think the roof is going to be nice and easy. Oh, well, there's wood shake under the roof. Okay, well, what does that mean? We've literally probably never done a roof before. I don't know what that means. Most of on this call probably doesn't even know what wood shake is, and that's okay. But that means you have to take, it's old. That's what they built houses with really back, far back in the day. So you had to rip all that wood off and you had to put all new plywood. Well, that's, plywood was much cheaper than it was during COVID, but it was that times 30 sheets of plywood. So you have to pay for all the plywood, and then each piece of plywood goes, the roofer charges you to do the plywood. Okay. So that was like an unforeseen couple $1,000s that we just never thought in a million years. Couldn't get the delivery, who couldn't pick it up. And I literally remember this to this day. I have PTSD about getting that wood there because, everything's on a strict timeline. It's your first flip. You have no idea what you're doing. Right. So, and I think that's really important because I'm telling you, I get a lot of calls like, I have a really good eye for these things. I know what colors can go here. I know what the market wants. I know. Great. do it. But just know that there's a lot more to it than just colors and what is it, Tarek on the show on HGTV knows, right? Because there's a lot of things you're not seeing that are not presented. So I'm not saying not to do it, because that is a very good way to get cash flow. And how we have funded many of our rentals is because of our flip profit. So I think that's really important. Now, again, we did our first flip, we did our second flip. We started to learn this stuff. Okay, I know how to do a bathroom, how to do this. So I'm a really good sales guy. I said, all right, well, what we're going to do is we're going to start selling GC jobs. I figured it was very easy to sell. I've sold for a long time. Selling homeowners is even easier. And we started selling GC jobs. Try to start off with just roofing, siding, windows, flooring, but then we started getting into kitchens and baths. Selling GC jobs are easy. Collecting the money from the GC jobs are usually easy, but the whole part in the middle is not always so easy. Homeowners are, for the most part, are very particular. They will notice a tile a quarter centimeter off. And it's a tough line of business. So this is a PSA to be nice to your GCs and everyone, your plumbers, your electricians. Be nice, because it's tough. And this is why it's always this constant battle of who doesn't show up. And we always showed up, but it's the same time, we didn't do the work. We subbed out the majority of the work. So it's a tough path, but thank God we had it during COVID, because flips were very, very scarce. We needed GC to be able to pay for the rentals and whatever else we were doing. So it was really important. Obviously, somebody had to be a realtor in the group as we're buying these houses and selling these houses. So I work for Stony Brook Realty. Again, just the standard realtor. What I think differentiates me from everybody else is that I do this for a living. My first house that I bought was, I believe the guy lived at home still. So I practice what I preach. I think that's really important in this business, to show, okay, yeah, well, this is why I think this rental is good. Well, how do you know? Well, I have 10 properties. So I think I know what I'm looking for. And I can run the numbers where, John Smith or Mary Jane, realtor in Ridgewood, they might not know. They just know Ridgewood. They only know Ridgewood. And I think that's important, because I pride myself in being a Jersey guy, and I really, really know the state very well, at least central to north. I don't really know south that well, but I think it's really important to know what you're working with. And again, I told you earlier, I really only try to do multifamilies because again, there's not as much commitment. Besides Matt, I had one deal that I sold, the 3-family up in Sussex County. We analyzed 10 deals, all on the computer, phone calls, a couple of Zooms here and there. The first house we actually went and saw, they bought and they got it, and they still own it now. So I really try to be efficient with my time. I think that, again, that's probably the number one thing that I'm good at is time management and efficiency. And that's the kind of deals that I'm looking for. So if you're looking to buy some stuff on market, off market, you can reach out to me. I can help you out with how to run the numbers. It's not rocket science. You shouldn't be scared about this stuff. It's pretty easy once you do it a couple times. Getting into property management. I always prided myself on being a really good landlord. I answered the phone when they called. I fixed the things that were broken within a timely manner. So I just said, all right, let's open this business up. It started off slow. Matt thinks he was my first client, but I had a 1-bedroom, 1 unit in Clifton before him. And that I still to this day have not spent $1 on marketing. That is strictly word of mouth, referrals, and Google. You can't believe how much business we've gotten from Google. So take that for what it's worth. Getting reviews is really important. And me working at Signpost, my first tech job, actually led me to know how to, not necessarily tinker with the system, but knowing that reviews are really important for Google. So yeah, now we're over 100 units and growing. We just actually recently took on a bunch of clients the last couple months. So we've literally tripled in the last 3 months. Albeit from 30 to 90 to a little over that now, but that's where we are, and I'm really proud of that business. And that's now a consistent, talking about base salary and commission. I look at all these streams of income as different things: rentals, base salary; property management, salary; wholesale, flips, and GC, that's all commission. So if you're starting to kind of see what I'm doing, I've gauged my corporate thinking to my businesses. And that's how I think it's really good. So I live off of those two salaries, and then anything that comes in is where I do my investing. And then wholesaling, that's recent. For anyone who doesn't know what wholesaling is, I'll just give a really quick blurb of what wholesaling is. It's simply, we find the buyer, we find the seller, we find the buyer, and we play matchmaker, and we take the delta in between. So someone's willing to sell a house for 100,000. I know someone who's looking to buy it for 120. I make that money in between the 100 and the 120, and do no work. So there's a lot of like low end wholesalers, and then you have some people who are like actually trying to really match a good deal. But from this wholesaler, we've actually bought a bunch of our own properties from this, for flips and for for other things. So it's been a really good connection, and that's why for my clients, I can bring them a lot of off-market investments because of this wholesaler. Okay, balancing act. So keeping the employer happy while running the business. I mentioned this a little bit earlier. I was always still top, like I think we had at the last company, there was like 70 salespeople. I don't think I ever slipped below like top 20. So enough for them to never really notice that I was, listen, they noticed. I already mentioned this before. They noticed, they knew that I was doing something else. I was not really too shy about it. Again, getting up from your desk, 15 times to call somebody, sort of a red flag. But I did it for 3 years, and, I kept saying, listen, I understand I'm going to be able to manage it. It was every 6 months, they would probably say something. I'm going to be able to manage it. I'll figure it out. And then I would kind of calm it down or do whatever I need. And then here up again. Because again, at the back of my mind, I always knew this wasn't at the end. I didn't care if something happened here, because I had this nest egg that you see here. I had that already. I had a business that was ready to go. I was right on the cusp. So at any point in time, I was pretty much ready to move on. And again, I think that's, Matt said earlier, that's the dream, right? That's what everyone, potentially aspires to do. And working, I'll tell you this, working for yourself is the best thing that you can have. It's hard at times too, to manage your own schedule. And I obviously have bosses, right? My clients are the bosses. But at the same time, I can stop and pick my daughter up from school during the day, and there's no one stopping me from doing that. If I want to wear sweatpants all day, I could do that too. No one stopping. I mean, I'm sure people now working from home can do the same thing, but I'm talking like in real world, I can literally do whatever I want, whenever I want. I can work at night. I can, after the kids go to bed, I can go back down and work a couple hours because I wanted to stop working at 2. If I want to go to AC, I'll go to AC. I'll take a couple calls there. Everything can be done from your phone pretty much anyway in this business. So I don't stop my life. And I think that's really been beneficial for like my mental health as well. Not knowing that I had to be in the office. How many people here, it's rhetorical, but sit at their office and go, oh, I'm done. And it's 11 o'clock. I don't have anything else to do, but you have to sit there the whole entire day, right? And do busy work. Some of the stuff that I hated the most in the corporate world was I had to tell my boss's boss where my deal was. I had to log it in Salesforce, and then I had to also follow up with an email. 4 things just to tell the same exact story when I could just write it once. And I had it under control already. So, that's the kind of stuff that I'm very happy that I don't have to do anymore. So anyway, when to take the leap. So I think it's really, I can handle a lot of pressure and a lot of work as a being, but at the same time, like everyone gets overwhelmed. So I think it's the point when you have your nest egg, you feel comfortable financially, and you mentally and physically can't take it anymore, right? You don't know which way to go. You're getting pulled in different directions. You're getting a lot of stress from your bosses. And I think that's the time when you're like, okay, I can finally leave. And that's where I got to that tipping point where I knew I just didn't care. I'm getting crap all the time from the boss about something. Well, it didn't really matter because I had this thing in my back pocket. And follow your gut. I think some people on this call who know me will laugh at that, but I follow my gut on pretty much every single thing. And I would give it a 95% hit rate. Every single time I feel something, I move past that, and I know that that's the right decision. And I pretty much go with my gut every single time. Sometimes I'll miss, obviously. But I think that's something that people need to be a little more intuitive with, and with themselves, following their gut, stop thinking so much about everything. and just follow the path. Does it pass the smell test? Okay, let's go. I would say is my number one differentiator between me and a lot of other investors and a lot of other employees. I think about things quickly. I feel that it's a good move. I ran the numbers once and I pulled the trigger. A lot of people overthink things, especially in real estate, especially with passive income. Oh, well, what happens if I need the money for this? You have to take a risk. You have to do something, or that's fine, or don't. Then you'll be working until you're 75. That's okay too. There's nothing bad about that. I'm just trying to say that you need to make these moves. Stop thinking so much, because I think it's important to actually, like I said, you have to pull the trigger, or you're going to be stagnant and you're going to continue to potentially not like the job that you're in and always get back on that hamster wheel. Okay, so this might get a lot of questions later on. I know, again, a couple people on this call, I've spoke to them today about this actually. How to execute. Don't use all your cash. I will give you the story that I have done for myself here to get where we were. So whether it's your primary home that's a single family or your primary home that's a multifamily, hopefully it's a multifamily that you're doing this with, because you're also going to be earning money while you're doing this. But home equity line of credit. The easiest way to describe what this is you going to the bank, asking for a credit card. Hi, my name is Justin. I make $50,000 a year and I have a 750 credit score. What does Chase Bank tell me? Okay, thank you for applying. You will get a $25,000 credit limit at 21%. Oh, great, thank you. And you can go spend $25,000 on that card the next day, no problem. The home equity line of credit, the only difference between that is instead of Justin walking into the bank, my house walks into the bank and says, how do I do? Look at my house is worth $400,000. I have put down this much money into the house. I have this much equity in the home. What line of credit can I get? Okay, you're approved for a $75,000 line of credit. So now the only difference is that line of credit is going to be, it's variable. So it's going to be between, whatever the market is, 4, 5, 6% on your money. And you only will pay interest on the money that you're using. So that $75,000 can be cashed the next day. Whereas credit is a little bit, there's a lot more fees to transfer money and use that money on a credit card. That's why you really want to make sure you're paying your credit card bills. But the house money that you're using from the HELOC is literally how we started this business. Without that HELOC, I would not be probably talking to you guys today. So I think it's the most important move that you can make is using the first asset that you buy and the money that you put in, you need to leverage that asset. So, you're not gonna be able to leverage a car, right? You bought a car, well, you can't borrow off your car like that. It's not gonna work like that. It's a depreciating asset. Where here is, the last couple of years, if you notice, like home prices have gone up. There's a lot more equity in your home than 2 years ago. So, and you probably didn't even have to make a repair on your house and it just went up. So you might as well leverage that money. And that's still your own money. So again, I haven't touched the HELOC in years since the beginning, but it's always there as like a fallback option when I really want to like go all in on something. You at least have that money in the background. Sure, you have to pay some interest, but it's literally pennies on what that money has made me. So I'm sure I'm going to get questions on that, and that's cool. I think that's a good one to go through. The process is usually a little bit longer than getting a mortgage, because you're going to go through a credit union or somebody different. They're going to take a little bit longer, but that's a really important path to take. Small business loans and lines of credit. So we took that same exact principle that I just gave you with the credit card and the home analogy. We did that with our business. So we had a year worth of our GC business. Hey, we made $100,000 this year, or we are not necessarily profit, but here we showed a balance of we did sales of $250,000 this year. Bank, what can you give me? Right. So we shop that price tag to all of the big banks: Chase, TD Bank, Bank of America, Wells Fargo, anyone who would take the application. And we leveraged that money and did the exact same stuff with it. Now we're using business money now. No, we're no longer using our own money. We're using business money. And that business money is now buying us homes. Obviously, we have to pay back the line of credit, unless you want to just pay interest forever. But we would pay that back with GC jobs that we sold, with property management fees that we picked up, with flips that we did. And that money was really just borrowed money for 4 or 5 months at a time. We were paying it right back. But it was the leverage that we had to buy these things and be able to do the renovations on these things. So again, if you notice, I haven't used cash since pretty much my first or second deal, my own money. All this is now being leveraged off of the other deals. Again, you need to have some kind of flow to come in, but you still have a W-2 job. You still have your rental income that you're getting in, so that can pay off these loans. Friends and family, I think that's important. You're going to have some people who have money that, hey, I'm okay making 6% on my money. It's better than the 1% I'm going to get in the bank. So sure, I'll lend this money to you for a year. And I think that's, again, a really big trick. Not everyone wants to invest in anything, but they want to feel like, okay, I'm investing in something that's real and I've known you, and so you can work out these different things with people. You don't always have to go to a financial institution. It's private money. This is the most private money you're going to get, obviously, because it's your friend or your family. So don't be shy to do that. But make sure that you're paying them back the exact way. Everything's done, dotted, dots I's, cross T's. Make sure of that, because you want to, if you ever have to go back to the well, hey, listen, look, I paid you back within a year. Do you want to re-up this again? And again, that's not your money. That's not my money. You just want to keep pouring this in because this is how you scale and this is how you get to where you are. Debt is okay. Debt is okay. Remember that. That's okay. This type of debt, buying the car that you couldn't afford, maybe not the best. Buying the house you couldn't afford and you only put 3% down, probably not the best. Buying a ton of clothes, not the best. But this type of debt that you get from your lines of credit and your small business loan, that's all a tax write-off. So it's not the end of the world that you have that, because you're scaling a business or you're scaling your portfolio. So it's really important to make sure that you understand that, the difference in that. And lastly, the cash out refinance. I left that last because it's probably one of my favorite things, and I'll explain in a couple of reasons why. For anyone who listens to Bigger Pockets, or you heard house hacking, that's from Bigger Pockets as well, the podcast. What you would do in this situation is you buy a house that's in lesser condition, you fix up the house, and then the house is now worth a lot more than when you bought it for. You go to the bank, you get a loan that's higher, you get a bigger loan on the house, and there's going to be a difference of what you can cash out and what is now your new mortgage. So your monthly payment's going to go up by a couple $100 usually, but you're able to most of the time pull out your whole entire renovation costs, and sometimes even all of your costs that you even put into the house. So now you own the house for free. There's like 2 or 3 houses that I have that I own now basically for free. I have no dollars in them. I have none of my own money that is in those houses. So that can happen naturally. I just recently did one on a property that I probably only put in a couple $1,000s total in the last 3 years, but it appreciated so much from when we bought it that I was able to cash the whole entire thing out. So now I am literally making money on a house that I put no money into. Again, none of this is rocket science. This is all very easy. You learn this over the time. You're not going to learn it all in this 30 minutes. But just keeping in mind that there's a lot of other tricks and tools. The second part of why I love the cash out refinance is when you make that money back. So, the title company writes you a check for $75,000. You're not paying any tax on that money. That is, because anything that's rolled into a loan, you're not paying, you don't have any tax to pay on that. So it's another way of legally hiding your money, because you hid it in a house, you refinance the house, and you can pull all that money out and you're not getting taxed, but you took the write-off on every single, everything that you did to renovate. So if you put in $50,000 on the renovation, you get to write off $50,000 on your taxes. Again, I'm not no tax advice, no tax accountant. Trust me, it's not my strong suit, but these little things are how you scale. I would have half the stuff, if not less, if I didn't do these 4 that are on here right now. I believe that's it. So I will open it back to the 2 of you. If you want to start off anything, or if anyone wants to chime in, that's fine. I don't know how long that took because I shut off my phone and my watch. So hopefully I'm within time here.
You are within time, Justin. Thank you. This was great.
That was great.
Yeah.
I know we have about 31 folks online, which is great. We're scheduled for an hour. I think, Alina, the Zoom will stay open longer if folks want to stay in for.
It will stay longer, yes. But in the interest of time, I want to be cautious. So let's take about 15 minutes and give folks time to ask their questions while they're popping up. I want to ask Justin, any regrets to where you at today versus where you were when you started your professional career? Anything you would have done differently?
Not too many. Maybe I would have bought a 4-family instead of a 2-family to start. Honestly, no, I really like where the trajectory. I'm proud of everything that I've done so far. Sure, again, if you ask me this not on the spot, maybe I can handle it. But yeah, for the most part, no, nothing too crazy.
Excellent, great. Matt, you want to go ahead with other questions?
Yeah, as expected, the last page, the technical stuff with the leverage and finance, got a couple questions. Joey and actually 2 Joes, Joey and Joe P, both asking about the HELOC. Joey is asking, what's the difference, or what he's just asking, HELOC versus cash out refinance. So maybe frame like, when would you use one versus the other? I know there's some differences there. Maybe just explain that.
Sure. The cash out refinance. So I would use the HELOC because you can only really take a HELOC out on your primary home. So you want to take the HELOC out on your primary home, and you're going to want to do the cash outs on everything else because you don't have that HELOC option. And yeah, I think that's the shortest answer to give you. You want to do that on your primary.
Yep. And then Joe P is asking more about the HELOC process. It can be a long process. I've actually done this on my primary just recently. So he's asking, it can be a long process. How long does that take versus cash out refinance? How long does that process take? So comparing the two, I think it's
the cash out. The cash out refinance process is just as fast as a regular refinance. You can get them done in 3 weeks. The HELOC process is like, depends who you use, but like it could be like 3 months.
Yeah, I did mine in about 6 or 7 weeks, but I had all my papers ready and ready to go, but that's the long process. Yeah. Another one coming in from another Joe, third Joe on the question.
Big Joe guy.
What is the usual length of time required to pay back the money used from a HELOC, right? So I think there's different terms from different banks. The most standard typical I've seen is 15 years interest only payments. And after the 15th year, then you have another 15 years kind of pay, you start paying principal plus interest.
Yep, that's correct. And you just have to make at least a monthly payment, just like a credit card. Think of it very, very similar to a credit card transaction.
Yeah. Cool. Any other questions, guys, on the phone? Want to take stuff off mute, ask a question, or drop one in the chat box?
While we're waiting for questions, Justin, so I know you mentioned your trajectory of starting with one business and then gradually adding others. Did you add them because you saw the demand, or because this was something that you really enjoy doing, or was there?
Yeah, good question. If you notice, all of them are related to each other. So as soon as you hire me for one of these things, I can pretty much take care of all your real estate needs and investing needs all within one-stop shop. Not many people have that. So, you'll hear a lot of property managers, they won't have the construction experience, or, okay, well, what happens when I want to sell it? Well, I'm a realtor. So pretty much any question you can ask me, well, what about this? I do that. I do that. I do this. So I kind of trap you to want to stay with me. And if you like me enough, then you'll buy from me one way or another. But I have you, and I have the expertise somewhere that you'll feel good about it. So there's been many clients, again, just like Matt, I've sold them the house. I run the building for them. I've done work at the building for them. And if I need to sell it for them, I can. So like I've tapped into them three different times, but it's all because it's easy, convenient, and I'm giving them, the service that they need, whether that's good pricing or just I will go above and beyond for the people who are going to give me more business. And he's not the only one. I've done that. It's like three different clients that I have that we've done work for them. I've sold them the home, and they're our property management client.
Excellent.
Justin, one of the things in your presentation, I think is like kind of the crux of how you were able to pull this off, which I think is, it's almost its own separate topic, but we'd love to hear you talk a little bit about like some of your time management techniques, some of your like discipline. I know you're a guy like stays off the phone, stays off TV, like think that's important for people to hear, like how you were able to kind of like manage all these things. It wasn't just like you kind of, I know you're a guy, you did put your head down, but like you did certain things to make sure you weren't distracted in a lot of ways that some other folks might get pulled and distracted.
Yep. Yeah, I mean, get off Instagram, I think would be the first one. Half joking about that, but the corporate world actually teaches you that. So they teach you how to schedule really well, especially in sales. You have to have, your time is valuable. So when someone's like, "Oh, do you have a free minute?" If I'm totally free, sure, but I'll say no. A lot of time I'll say no. I can do it on my time, right? Nope, I can't do it now. We can talk at 3. Can you talk at 3? Okay, right. That's like a lot of the stuff you learn in the sales side of things. But just having everything really structured, I overly use my calendar for pretty much everything. If I have to like remember, like I have a recurring thing. I mean, I've lived in my house for 5 years. Every 7 o'clock at night, every night, it tells me to take the garbage out, recycling out. Right. So I try not to I have so much stuff going on that I put nothing to my memory if I need to. So everything goes in the calendar. I structure my emails very, very precisely. That I learned at the corporate world. I write a really strong, quick, direct email, which is really important. I'm not wordy anymore. I get really, really quick to the point. And the same thing in this, like I'll give you the time that you need, but at the same time, like my time is valuable. So I need to make sure that I'm moving on to the next thing. And I don't let, I have no problem saying like, "Hey, listen, I have to go. I'll cut off a conversation if I have to. Yeah, I'm getting another call. I have to go." Like you have to do that, because if not, people will chew your ear off forever. And I don't let that happen. I'm really disciplined with my time. Try to wake up around the same time every day, do the same exact thing to get into my routine. And, I think everyone loves routine at the end of the day.
Awesome. Time blocking calendar is a huge one. That's one I'm trying to get, like literally as much and often, like you said, memory, especially when you add kids to the mix and family obligations, that's huge. It's kind of like I said, it gets frustrating if you forget to bring the garbage out, something silly like that, but it's just not a calendar reminder. So
yep. Have you done do not disturb on your phone?
I have not, but I've noticed Alina uses that actually. But I like that feature.
I think she just has it on your own number. I don't know if she does that to everybody.
Maybe.
But yeah, no, I mean, I've been talking to people who do that as well. They're like, nope, from 9 to 10:30, do not disturb unless it's like 3 people, and that better be an emergency. And like when you condition people around you to know that like, nope, like sooner or later, the people who call you and talk to you a lot, like I'm not free from these times. I'm not going to answer your call. And then people will condition themselves naturally to know, okay, I can't call Justin at 10:30. He's just not going to answer. He's doing something else. And I think that's really important to try to condition other people around your schedule too.
Excellent. It does help to concentrate. I'll tell you that. So yeah, I have it pretty much all day.
And no notifications on your phone. I saw that one documentary on Netflix and I like spooked myself out. So I have no like, I think I only have email, text, and maybe Snapchat, because I think that's funny. But other than that, I have no other notifications. So, you can send me a direct message on Instagram. I might not look at it for 2 days. And then like, I feel like I missed you, but that's why I'm not like a huge social media guy. But at the same time, I think that really helps me, because when your phone's always lighting up, your natural instinct is to look at it. Who's calling me? Like, what is that? And then you're just never going to get anything done.
Yeah. Going back to the chat box, I see a question from Tyler, again, back to the HELOC question. So his question is, are HELOCs used best in short-term cash grabs, such as flips versus long-term rentals?
My thought is it would be better to be used in your short-term cash grab, because you can pay that back pretty quickly. But I also, if you know that you have money coming in, you have a bone, like you don't want to have it, listen, because the thing is, if you don't pay it back quick enough, you can't use it again. Right. So using the whole entire nut for one rental home, that's going to only pay you back $2,000 a month. Well, do the math. How long is that going to take you to use that again? So you got to be a little bit, strategic with what you're doing. But that's how you're going to get the most buying power, is with this money. Plus, you got to remember, you're making cash. So as soon as you make that money back, you can start reusing it again. But yeah, we for the most part use it for the short term, because we know we're going to make the money's back, with a flip or a big GC job or something like that. Or now we have a lot of property management clients. So when each month comes and we have to collect dues, we can actually make an actual dent in any of the debt that we have. So yeah, you should use it for both, but it would be harder to use on a long term unless you have some kind of bigger chunks of money coming into you.
One of the, it wasn't listed in yours, Justin, and we should talk about this, but I'll throw it out while we're on the phone here. Is another potential source is if folks are invested in whole life insurance, that's another source where you can kind of pull the money out, leverage it. You kind of like taking a loan from yourself, and then you can pay that back right back in. I think it continues to earn even as you pull it out. So that's
no penalties like a 401k.
No penalties, available to you, ready to go. So it's very different than 401k. Like that's not really accessible, but a whole life insurance, you have obviously the life insurance aspect of it, plus a cash aspect of it, which you can access that cash. It takes a little bit of time to build that up, number of years. You could do it against your personal, or I've also heard of people doing it insurance against their business as well. That's also another option. So again, I think it takes a few years to build up that cash value. I think there's other, again, we're diving in maybe more technically than I'm able to speak to or comfortable speaking to in front of a large group, but I think there's other ways to maybe speed up that timeline. But that's I've heard another pretty popular source of non-traditional cash that people can kind of leverage and, like I said, speed up the velocity of money, which is really important.
It almost sounds like you leveraging a massive stock portfolio on like some type of margin type thing, not a margin account, but like another line of credit off of your stock portfolio, which you need a much bigger one than than you're saying. So it's not as realistic, but it sounds similar.
Yeah. Going back, one other question. Do you passively, so passive income, are you in the stock market as well? Is that one of your passive income streams?
Yep. So I always go back to like Rich Dad, Poor Dad. I'm sure a lot of people have read that. You got to pay yourself first, blah, 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 blah. You try to take the money that you're making, and I try to put a certain percentage of every, this is why I track my monthly income now, since I don't have a W-2 to tell me what I made. I track it. I try to put a certain amount of money. Yeah, always. I want to be in every single business because, like I said earlier, I don't know what's going to happen with real estate. I don't know what's going to happen. You just never really know 100%. Real estate's usually historically safe. But yeah, I'm pretty into the stocks as well. A lot of long positions, some swings, just to keep leveling up there too. I don't have like a major passion for it. So I just, stick with, the same 10, 15 stocks. I don't, dabble overly in that, but yeah, I think it's really important because, and diversifying within there too. I mean, you hear the same stuff from everybody. I'm not making not recreating the wheel here, but, foundationally, yeah, you have to be in stocks too, because that's as passive it's going to be.
Yeah. Question from Craig. What are some of the top things to focus on when doing a full renovation on a fixer-upper to increase the value of the house? So we're like I know part of your answer here. And then if your partner is present, Antonio, maybe he wants to answer some of that too. But you can take the first shot. Maybe we'll hear from Antonio.
Maybe he'll join in. Maybe he probably jumped off already. He's probably sleeping.
I see him.
So the top thing. So this is for strict value of the home. Kitchens, baths, bedrooms, curb appeal. Although windows are really important and they keep your house insulated, and you put the R8 insulation in to keep your house warm, and you have a high efficiency HVAC system, that's not really too sexy. That's not what the appraisers look at. Trust me, I've talked with a lot of appraisers. I have 4 or 5 of them in my phone on speed dial for whenever I want to ask them questions. I get really chummy with them while I do a lot of this stuff, so I can go back to them and ask them. Beds and baths, kitchens and bathrooms. That's it. That's all that really matters on this. You could do a new roof. You can do this. That doesn't really matter. Exterior stuff for the most part, they will consider that as like something you're supposed to do. Keeping up with your exterior, keeping up with your roof. They don't care that you have brand new gutters with gutter guards. They care about how nice is your kitchen and how many bedrooms do you have in the house.
Yeah.
Hopefully that answered the question, Craig.
That's excellent.
Hey, Matt, I got a question. Justin, it was awesome presentation, man. Thank you. So for someone honestly at the doorstep of real estate, so really not having dabbled, this is probably my first introduction to it, listening to you. So story was great. You know, you mentioned syndication early on. You mentioned making investment. I've heard you say the more doors under one roof, the better. Maybe Matt, that was Matt saying that to me. But where do you recommend someone starts? And I mean, if you're a little risk adverse, trying to dabble, trying to get a start, you said you have to start somewhere. And then maybe you can comment on where to look. I mean, I would have never thought of, I live in Jersey. I would have never thought about looking in Jersey. I mean, I'm looking at single family homes down in, you know, vacation spots. And maybe that's not the right, you know, it's definitely not the right play, right? So just curious on literally getting started, what you think, what advice you give, and some of the numbers you run as well.
Yeah, really good questions. So I would not, I'm not a big fan of condos, townhouses, especially your first deal out of state. You know, I have a friend who did that and he's doing it well. But it's tough. Like, you're remote. You don't know that area as well as you know Jersey. Where around do you live?
I'm in Berkeley Heights, New Providence.
Okay. Yeah, you're like in the Mecca, right? Of like where people want to buy real estate in the country. So it's tough, right? That's why I ventured out into Sussex and Morris County, because I'm the shark in the easy waters there, versus, you know, like you can't buy in Nutley anymore. That ship sailed 10 years ago. And you could, but you're not going to make much money. And you know, if you want to, again, to give you the answer, the safest thing for you to do is know where you're going to be, try to find a multifamily that you can live in to start the process there, whether you own your house now or not. But, you know, people, there's too many things on the internet and, you know, again, Instagram, social media, like, oh, let's go Airbnb in Kansas. There's a cool little lake in Kansas what do you know about Kansas? And what do you know about lakes? Nothing. So stick with what you know. You know your area. You don't need to Airbnb things and try to, you know, I've had people call me like, hey, you know, Justin, look, I got this thing out in this area. I'm going to make $200 a month. I said, cancel the deal immediately. What do you mean you're going to get $200 a month? Get out of that immediately. Right? People, they don't know that that's not good. So you need to pick a place that you're okay, or there's plenty of deals that are under $300,000 that can make you $800-900 a month. Plenty. Now, it's obviously winter time in Jersey. Not, you know, it's a little bit harder now with the market, but the many homes that I have are under $400,000. Almost every single one of them that I bought. So you don't need to buy that. You know, everyone wants to buy the $800 home in Morristown, Montclair. I heard Bloomfield's good. Yeah, Bloomfield was good 5 years ago. Where were you? You were sitting on the sideline running spreadsheets. So you have to make sure that you know what you're doing and be one step ahead of everybody else. I personally think I'm one step ahead of everybody in Sussex County. And now, if you look where the market is now, the same house that I bought a year and a half ago is $100,000 more for no reason, because I was just there earlier, right? So you have to kind of go against the grain and not do what everyone thinks is cool. And what some famous guy on TikTok said was the smartest thing to do, and go buy in this area, right? So I think that's really important for you to think through. You know, stick with what you know and just start off small. And then once you get the first one under your belt, it really snowballs.
Cool, man. Appreciate it. Thank you.
Great questions and excellent answers. Thank you, Justin. Great job.
Thanks.
Yeah, so I think we're 15 past the hour here, and Justin's throat might be a little dry by now. So
I go all night, whatever you need.
Justin, if you want to share your contact information, if folks want to reach out, but it's up to you if you're interested in sharing. Not gonna force.
Yeah, I can leave it. Let me go back here. If you want,
Perfect.
send that out later, Matt, to everybody who got the webinar. That's fine. You can do this. You can put my email on there too. That's fine.
Sure.
Yeah, folks, we will be sharing the recording, so you will have this as a part of the recording. If you want to re-listen to the presentation or reach out to Justin later, by all means. Justin, this was great. Again, thank you so much. And Matt, thanks a lot for bringing your friend to our virtual meetup to present for us. Thanks everyone for the questions, and I hope you guys have a great night. Take care.
Thanks for having me. Thanks, guys.
Thanks, everybody. Good night.
Take care.